Hi, Miss. I'm Rushika here, and this is my team member Najwa. And today we want to explain about conceptual framework, which is there is a four conceptual accounting assumption, which is first one is economy, and then second one is going concern. The third one is monetary, and the fourth one is a periodicity. Okay. For the economy entity assumption, this assumption states that the activities of business entity should be kept separate from the personal activities of its owner. It means that the financial transaction and record should be reflect the financial position and performance of the business as a separate economic entity. And for the example is if a business owner withdraws cash from the company for personal use, it should be recorded as a withdrawal rather than expenses. So the second one is going concept assumption. The definition is that this assumption assumes that a business entity will continue to operate indefinitely unless there is an evidence to the contrary. It implies that financial statements are prepared with the expectation that the entity will continue its operation in the foreseeable future. For example, when preparing financial statement, the assumption is that the company will continue to generate revenue, fulfill the obligation, and meet its financial commitments. So next, Najwa will explain
Uh,
about the monetary and
Next is about monetary. Monetary is a financial transaction should be measured and recorded in a stable and universally accepted currency, such as the local currency that allows for uniformity and comparability in financial reporting. For example, all monetary values in the financial statement will be expressed in the currency of the country where the company operates. Next is about periodicity. Periodicity is assumption divide the economic life of an enterprise into regular and equal time periods for financial reporting purpose. Financial statements prepare regular intervals, usually on an annual, quarterly, or monthly basis. For example, companies prepare annual financial statements that cover a specific period such as fiscal year to provide timely and meaningfully for information to user. Next, I will pass
then I
to
will
my team member.
and yes. And I'll be explaining for the issue in the consumption framework for financial accounting and reporting in current situation, which is the conceptual framework for financial accounting provides a foundation for developing accounting standard and guides the preparation and presentation of financial statement. However, there's several issue or challenges associated with the conceptual framework. Here are some common issue. So the first one is subjectivity in measurement, which is one of the challenges is the subjectivity involved in measuring certain items in financial statement. For example, the fair value measurement of asset and liabilities often requires significant judgment and different interpretation and lead to verifying result. The subjectivity can affect the reliability and comparability of financial information. The second issue is lack of timelessness. There is another issue is a lack of timelessness is financial reporting. The traditional periodic reporting framework may not provide information in a timely manner, especially in a rapidly changing business environments. User of financial statements often require real-time or more frequent information to make informed decision. And the third issue is complexity in reporting standard. Financial reporting standard can be complex and difficult to understand, lead to challenges in their application. The conceptual framework aims to provide a coherent and consistent basis for standard setting. However, the complexity of standard can make it challenging for preparers, auditors, and users of financial statement to interpret and apply them accurately. And the fourth issue is indicate guardians for emerging issue. The conceptual framework may not always address emerging issues as a practices evolve and new transactions arise. There may be a lack in providing specific guardians within the conceptual framework. This can lead to diversity in accounting treatments and inconsistency in financial reporting. And the fifth issue is lack of flexibility, which is the conceptual framework is designed to provide a structured framework for financial reporting. However, some argue that it may lack the necessary flexibility to accommodate the unique circumstance of different industry of entities. This can result in standardization that does not fully capture the economy substance of certain transaction. The sixth issue is challenges in intangible asset reporting, which is the conceptual framework faces challenges in the recognition, measurement, and reporting on of intangible asset. There is a debate around issues such as the recognition criteria, useful life estimation, and impairments testing of intangible asset, which can lead to the inconsistency in report practices. The last but not least for the issue is ethical consideration and judgment, which is financially reporting involve ethical consideration and the exercise of professional judgment. The conceptual framework may not explicitly address all ethical and judgmental issue faced by preparers and auditors, leaving room for different interpretation and potential ethical challenges. Uh, and then addressing these issues requires ongoing efforts by standardized setting bodies, regulators, and accounting professionals to refine and enhance the conceptual framework, provide clearance guardians, and adapt to the evolving business environment. Continued dialogue and collaborating among the stakeholders are essential to ensure the conceptual framework remains relevant and effectively addresses the challenges in financial accounting and reporting. And the next, Najwa will explain about
And
the analysis of from above issue.
analysis from the above picture, the recommendation that I can recommend is first, enhance clarity and simplification. For example, effort should be made to enhance the clarity and simplify financial reporting standards. Clear and concise guidance can reduce complexity and improve the understanding and application of accounting standard. Setting bodies should focus on providing practical examples and illustration to aid in the interpretation and implementation of standard. Second is address timeliness. Consideration should be given to incorporating more timely reporting requirements within the conceptual framework. This could involve exploring the use of technology and data analytics to facilitate real-time or more frequent reporting. Emphasizing the importance of providing timely information to users can enhance decision making and responsiveness to changing business conditions. That is incorporate flexibility, which is the conceptual framework should allow for a certain degree of flexibility to accommodate the unique circumstance of different industry or entities. This can be achieved by providing principle-based guidance rather than overly prescriptive rules. It is important to strike a balance between standardization and allowing entities to reflect the economic substance of their transaction. Next is address emerging issues, which is the conceptual framework should aim to address emerging issues promptly. Regular review and updates should be conducted to ensure that the framework remains relevant in rapidly evolving business environment. Collaboration between standard setting bodies, practitioners, and other stakeholders is crucial to identify emerging issues and develop appropriate guidance in a timely manner. Next is enhance ethical consideration and professional judgment. The conceptual framework should explicitly address ethical consideration and provide guidance on exercising professional judgment by promoting ethical behavior and providing a framework but for handling judgmental issue can enhance the quality and integrity of financial reporting. Professional bodies and regulators should provide ongoing training and guidance to accounting professionals on ethical practice and judgment. Last but not least, the recommendation of the issue is stakeholder collaboration. Continue collaboration among standard setting bodies, regulators, accounting professionals, and other stakeholders is essential. Regular consultation, feedback mechanism, and public exposure draft can facilitate a more inclusive and transparent standard setting process. Engaging with a wide range of stakeholders ensures that the conceptual framework reflects diverse perspectives and addresses the needs of different users. By implementing this recommendation, the conceptual framework can be strengthened to address the identified issues and improve the quality, relevance, and comparability of financial reporting. Okay, cheers.
Thank
Okay,
you, Miss.
thank you, Miss.
Thank you, Miss.
Wait.
Tengah kak.
Okay. Okay, mau tengah dulu. Bye. Good night.
Good night.